Hello traders, hello everyone. We will begin in a few minutes. So can you hear my voice? If you just We are streaming today to YouTube, so we are watching both chats because on the YouTube there's also chat. So if you're watching this on YouTube, please let me know if you can hear my voice there. If you're watching a trading view, please do it the same. Okay, so we will begin shortly. Okay, yes, perfect. Okay, so we will wait for more people to join. Okay, everything is fine. Perfect. So in today's sessions, I will actually look more into details about the cryptocurrencies in general. I will look at some of the correlated assets, obviously, which are important for the crypto flows. So if you have any questions, anything, please let me know into the chat box. If I will have enough of time at the end, I will also take a look at some of your markets that you want me to cover. And lately, I've been also receiving a lot of questions how I have these symbols and quick chart access on the left side of the trading view. Actually, that's made in this browser. I'm using Firefox, so that's are just a shortcut and not actually. It's not the symbol. It's not the list from a trading view. Trading view list is on the right side, as you know, because for me it's much easier to handle this on the left side somehow. Okay, so as I said, we will look at the cryptocurrencies at the start, and then also at the end I will look at the FX because, as you know, that's my somehow my favorite markets, favorite asset, and everything, as you know, is linked. So of course we have to track everything. So what I have here on the top, I have Bitcoin, and here at the bottom, I have dollar index. So whenever we try to define the next major move for the Bitcoin, or to make sure what is going on, if maybe the Bitcoin rise is really the one that could have legs or no, we have to look at the dollar index. And what I see on dollar index from the last year highs is a very nice and strong reversal. So despite what I really like, that despite the FTX story and some good news that they recovered some of the sets, Bitcoin has managed to recover above the levels that we have seen back in November. Okay, and now when these cryptocurrencies are also trying to stabilize despite those bad news, we still have weak US dollar. So weak US dollar, in my opinion, could last in 2023. Of course, there will be rallies, and maybe the next one is not far away. But overall, generally speaking, I think that this is positive for Bitcoin and, of course, other assets. So I think that cryptocurrencies could potentially see more upside. However, what is the issue at the moment still with the cryptocurrencies, and why they are not much higher than current prices, is because there's still not enough of trust back in these crypto assets. Keep in mind that stock market is very probably the most important assets, and if you look at the US stocks, they're still somehow very low. Look at the NASDAQ 100. So when we will start to see that those stocks will recover, will move to the upside, will form some stable low, then I think that the Bitcoin will see also much inflows, much more inflows, and this will take the prices even higher. Okay, but before we go to the some Nasdaq and other charts, I want to look at the dollar index because, as I said, dollar index is very important for the overall Bitcoin flows. So if you look at dollar index here, uh, you can actually see that market is making a very strong reversal from the upper side of this channel. So again, maybe if you watched our analysis, I shared a lot of charts. Maybe you noticed that I shared this chart in the past, and not only that we retested this upper line, but more importantly, we have seen a very strong reversal to the downside from the upper line. So back then, when the price was at these levels, I didn't know if it would break higher or turn to the downside. But what is the most important, that we see the reaction from the resistance that we've been tracking. And notice that this measurement here is very similar and equal to one back from 92 to 2000 highs. More importantly, this drop from that highs is clearly impulsive. So if that's an impulse, and even if we just try to focus on basic technical analysis, you would expect that market will resume even lower towards the lower side of the channel. I'm not sure if the breakout will occur, but that's our minimum projection, because I don't want to look into the markets too far into the future. Okay, so I want to look at this structure, and if you look closely here, I will bring on 4-hour. You can clearly count 5 waves down. We have some FIP levels here that could potentially limit the current weakness. We are also testing this level from May 2022, and more importantly, this could even be extended wave 3 still if you look at the alternate count. So in either case, I think that the next bounce could be potentially meaning more weakness here on the US dollar. But we know that nothing moves in the straight line, so definitely we should be aware that we will see at some point a corrective recovery. Okay, we should be tracking the S&P 500 and to also what the US yields are doing as well. We are currently seeing just today the US notes, as I see, are breaking to the downside, meaning the US yields are rising. So this is supportive for the US dollar. We are also seeing some reversals on the majors as well, but we will cover this one later on. So if we have these 5 waves down here, meaning that dollar should continue lower, and if that's the case, the Bitcoin then should continue higher. Okay, so I will be looking for something like this. Resumption to the downside after any bounce. I'm not sure from where exactly this bounce will occur, but clearly 100 is a very important level for the Bitcoin for dollar index. It's a round figure. These round figures are psychological numbers and should be very important as well. So here at the same time, whenever we see a pullback on Bitcoin, I think that there can be opportunity on the long side. Okay. Also, if you look at, I have here the Bitcoin historical volatility. Let me check if that's the right one. Okay, maybe that's the one. Okay, and look at this Bitcoin volatility. We have recently seen an increase in volatility, which is good because we want markets to move aggressively to be able to make money. Because if the market volatility is low, if the market is sideways, then you cannot make money. So you want to see that market will move. And what I really like about this cycle, watch the perfection of these swing lows here on this volatility index. So this is the cycle. It's like a map for the volatility. Okay, so and we can see that recently we have seen a very nice bounce on this cycle. So it means that volatility on Bitcoin is picking up, and that's good because at the same time we are also seeing that this is happening when the Bitcoin is moving to the upside. Of course, there can be a new volatility taking us even higher, but the Bitcoin will come to the downside with a sharp drop. But overall, what I'm trying to say here is that even if we are headed to the upside in the bullish run, this volatility should leave this uptrend in progress. okay, because the volatility, it looks like that should stay here because recently we bottomed here at the end of 2022. So I think that 2023 could be quite interesting, and based on the wave principle, I think, and the dollar itself, I think that it could be positive for the cryptocurrencies, and I've been talking about this already last year. Also, if we look some of the stocks, here I have AMD stock. As you know, this one should be very, very important as well for cryptocurrencies. They are linked, obviously. And if you look just this short-term structure that's up from October lows, that's a clearly five-wave movement. You have some very aggressive sell-off. It was around 78.6%. And notice what happened here. Market actually took us back into this gap area. Okay, so this gap, which was here back from November, was filled and market reversed to the upside. More importantly, we have another strong bounce here. So in my opinion, we could see more upside here on the AMD stock. And if that's going to be the case, then you know that this could also be positive for the cryptocurrencies. Also, I have here NVIDIA. Let me just try to find it because I have a lot of markets here. Okay, so here as well, looking at some basic technical stuff, left shoulder, head, right shoulder, very nice equal pullback, right and left shoulder. And now we are here moving to the upside, trying to form a breakout here. Okay, maybe with the breakout, not yet, but maybe the breakout will occur in the next few weeks. Also, why I think that this could be the case is because this rise from that low is clearly looking impulsive. Okay, so I think that more upside could be seen. Now, if I try to label this one for you, that could be wave 1, maybe, just let me take a look here, maybe wave 3, 4, 5, and this could be potentially a flat formation. Okay, so even this one suggests that we could see more upside here. So we have another confirmation that, at least in Elliott wave terms, of course, that maybe stocks could potentially moving close to a support and reverse this year. Also, let's take a look here, Coinbase as well. I'm not sure if you watched the video. I shared this Coinbase, I think, on Friday's video as well. Now, here we also have a very interesting price action. What I like about this chart is that we broke to a new low here around 40, and the prices after this recent recovery recovered back above the previous swing lows here. So it means that this previous swing low, which was broken, didn't act as a resistance. First, it was as a support here back in November and December. Then we broke through and then reversed to the upside. That's a clear failure breakdown. Okay, more importantly, this rise is clearly impulsive. So again, we have another market that, at least short term, suggests that we could see more gains here. Okay, so even this one suggests that we could potentially see higher prices going into 2023. Also, let me take a look here on Bitcoin futures. Where I have it. Okay, now this one is very interesting. I have it here. Let me switch this to 4 hours. Okay. We can hide this. Okay, so what we have here, well, what's probably the most important at this stage, if you are maybe intraday trader, is that you can count 5 waves up from December, that's what, end of December lows. Okay, you can count 5 waves up, and whenever we have 5 waves up, the market may potentially slow down because that's how the markets function. They move 5 waves in one direction, then makes a 3-wave setback. Nothing moves in a straight line. Well, unless you are looking at some, I don't know, specific altcoins, who knows. Anyway, so that's how the market will normally function. You will see 5-wave movement and a 3-wave setback. And whenever you see or expect a corrective retracement, you should pay attention to the previous swing lows when you're in uptrend. Okay, and that's definitely the former wave 4. So that's your ideal support. Not only that, I will move this a little bit. Not only that, we also had this gap here, it was from a week back. Notice that this gap, whenever there is a gap, there are obviously a lot of orders, and some of them are unfilled. And usually these gaps, when they are filled, new orders will be activated, and that's why the market will try to again resume into its primary and own direction, because the flows will again, new orders that will be executed will try to push the price higher after the gap is filled, because the flows will change here. Also, the gap was not fully filled, so I still think that this could be quite attractive and interesting after the next pullback. So if I try to label the wave count here, this could be easily wave 3, an extended wave 3, and you are now here trying to complete this lag, so watch out for a wave 4. So the next wave 4, I think, could be an interesting opportunity here at the former wave 4. If so, 20,000 also, not only that we have this wave 4 here, we also have 20,000 level. As you know, that's always somehow been in magic number. It's a round figure. So since we broke above that level, it held as a support. We could retest it on the next potential dip, and I think there could be an opportunity on the long side. Of course, going and jumping into, if you're an intraday trader right now, right here, well, that doesn't really make sense because it's overextended move. Of course, market can always go straight up from here, but just be aware of that risk. Okay, you probably don't want to be on the wrong foot when this wave 4 will unfold, but you still know that market will continue higher. So watch out for this wave 4, and the invalidation level of this whole structure would probably be here around 18,000. So if we would slip back below 18,000, then I'm afraid then that Bitcoin is headed even lower. Okay, so that's the important invalidation level, and that's the important support level here around 20,000. The resistance level obviously is here around 23,000 up to 24.25. That's the resistance area. We don't know from where this wave 4 will show up, but the important is that if you want to be on the long side, you probably want to wait on that pullback first. Okay. Now, earlier I also mentioned NASDAQ 100. Okay. So I will take a look on the NASDAQ 100. I think I have it here when I have the S&P 500. Okay. Okay, so that's the NASDAQ 100. What we have here? Well, potentially we have the counter trend movement. And notice that this counter trend movement could be ending with this diagonal pattern. It can be an ending diagonal, maybe possible still in progress. But what I really like about this whole price action here, when tracking it down from the highs, is that we have no overlaps. You have overlap here, you even have overlap here when price broke the new low and then turned to the upside. Okay, so this overlap suggests that the drop from that high could easily be corrective. Okay, again, if of course NASDAQ 100 and technology sector is very sensitive to higher rates. So if the rates will rise, the NASDAQ 100 technology sector will suffer probably the most. However, the Fed hiking cycle is most likely coming to an end because the inflation is coming down. Inflation is at 6.5% in the US. So if we get to 5% and the rates goes a little bit higher, they will be close enough for Fed to stop the hiking phase. So if that would be the case, it means that stocks could stabilize. It doesn't really mean that they will aggressively move to the upside, because normally that's the case in dovish policy. Okay, but if the Fed stops the hiking, it's not really dovish; it's just neutral. Okay. However, there is last week there was some bad data coming from the US, and this potentially, always when you have bad data coming out, you think that there is a new recession risk coming, and that's why stocks somehow sold off last week. Okay, so if there would be recession, of course stocks would drop. But what would be ideal scenario for stocks to stabilize later on is that, of course, Fed steps in. If you have a recession, stocks drop. Bad data after bad data, week after week, Fed steps in, and they will lower the rate. That would be very bullish for stocks. Okay, so we'll see what will be the data going into the 2023, but that's definitely something that we will have to track on, because data will give us an evidence what, or maybe some signs what Fed may do next. But definitely I really think that they won't be aggressive with rates, because clearly inflation is coming down, and they don't want to risk to put too much risk on the table, obviously. Okay, so if this NASDAQ 100 would potentially bottom, that means it's a very bullish for, of course, for AMD, from NVIDIA, and for cryptocurrencies. So watch out this market as well very, very closely. Of course, there is room still for another dip for a wave 5 to complete this ending diagonal. Not really sure if that will happen, but overall, even if we print the new low or not, I think that for 2023, in the second half, even if we see more weakness, we will eventually be trading, in my opinion, to the upside. We will try to build a base here. Okay. Now let's take a look also very quickly on the Ethereum. Now Ethereum is very interesting because somehow has been acting better than Bitcoin. We have seen a very nice move here out of this downward channel, and looks like that we are trying to make this new 5-wave recovery. And if you look here on the hourly chart, okay, or I will make it like this, rather to switch this to 4-hour. Okay, you can see here that we are testing this resistance going back to November. So clearly this could cause some consolidation. Maybe we'll see another push to the upside, but eventually I think that this another higher degree wave 4, similar like Bitcoin, will show up. So the question is what to look for when you see this wave 4. Will you be maybe trying to split your investment if you're looking to buy something to put in Ethereum, something to Bitcoin, or maybe only into Ethereum? Because what I like about the Ethereum overall is that Ethereum somehow has a better looking wave structure compared to Bitcoin, especially if you look at the ratios. So I will look at the ratios. I think I have it here. Just a second. No, I have to go to crypto evidence. Okay, and I have here, I think, Ethereum versus Bitcoin. Shouldn't be somewhere here. Just do it. Okay, here it is. Okay, so here we have a very beautiful pattern, in my opinion. We have a very nice recovery and a very nice counter-turning movement. Clearly that was a free wave drop. More importantly, you had another very strong impulsive rise. So in my opinion, there can be more upside coming after the next dips, or either we will see both moving somehow into the same direction, both together, Ethereum and Bitcoin. But I think that Ethereum has more upside potential based on this one, based on this look. Okay, hope this makes sense. Okay, now let's take a look also. As I said, we will look at some of the FX market. Now let me look at, yes, someone is asking on YouTube if we will cover gold. Yes, we will. Okay, now let's take a look on euro dollar. So euro dollar is, in my opinion, making an important, interesting reversal and could see more upside, but again after a pullback. So obviously it's same like dollar index as I showed you earlier, but the opposite direction, obviously. Now ECB just today expressed that they are ready to hike more. So that was actually the speculations already for the last few months, and that's why we have seen a major reversal on the euro dollar, because the Fed, on the other hand, was slowing down this hiking pace. So I still think that the euro dollar will see much more upside, but I assume that we are now at this potential resistance here around 1.1109 level. So we are seeing prices in a fifth wave. If you look closely here, I can very easily again count 5 waves up. Okay, you are now at the resistance. We track this one very closely. So that's the first fib resistance around 109. Higher one is at around at 1.10, 1.11. But still, I mean, just be aware that this is a little bit late for any longs to be for any new longs from here. I just think that there can be a new setback coming. We are definitely trading at some important levels or very big figures, especially as I said earlier, dollar index around 100. Also, you have dollar yen as well moving into some interesting area. So here I'm expecting this ABC setback. We've been also tracking this hourly chart as well. Notice that recently market came out of this triangle, and normally when you see a very strong push out of a triangle, especially since Sunday open, okay, to a new high with a very sharp move, usually this is not the real flow. These are the early session flow, early of the week flows that will usually be reversed, and we can already see very nice reversal even back below the open, not only into this gap. Also, the important is that previously that was a triangle, and we know that moves out of a triangle in Elliott wave terms means that you are in a final stages of a higher degree cycle. So it's not the perfect pattern here, but still I can count this with 5 waves, forcing a little bit, I know, but fifth waves sometimes will not have a clear substructures because it simply tells you that maybe the bulls are losing strength to form the ideal 5-wave substructures. Okay, more importantly, we have seen a very nice reversal so far. So actually I would not be surprised to see more weakness here going into this week, or maybe just consolidation, of course, but I'm clearly aware that there can be some higher degree pullbacks. Also, if we look here on cable came to the upside last week after the inflation came lower, but around expectations, 10.5%. However, there were speculators still betting that Bank of England should do more with hiking rates, but they were one of the first banks that were actually were concerned and still are concerned regarding the recession, and that's why pound has seen a very nice pullback here in December. However, we are now reversing back towards these highs, some resistance here, but I still think that eventually this resistance will be broken. Not sure if after this current pullback, or we will just simply stay in consolidation, and this whole price action could actually be maybe like a triangle or something if we'll just keep chopping around and then we see another push to the upside. Okay, but overall I think that the cable is in a very good uptrend, healthy uptrend, and that there will be more upside after pullbacks. Also, as I showed you already several times this hard degree chart, we bounced very nicely from the lower trend line. So even if you somehow ignore the wave count, what would you expect? Well, if you just think that we will keep chopping around here between these two lines, you think that more upside obviously could be happening towards the upper trend line to retest it. Okay, so I'm definitely bullish here on pound. Okay, now let's take a look on. We will take a look on New Zealand dollar. This one is very interesting, but before we go to the New Zealand dollar, I want to bring on the chart of the Dow Jones. Okay, so whenever I look at any potential trade idea, I try to look at the most simple wave structure with the clearest formation. Okay, and if you will scan through NASDAQ, S&P 500 and Dow Jones, I'm sure that you will stop at the Dow Jones. Okay, because clearly that was a very nice clean 5 waves up, and when you have these 5 waves up, you should be aware of more upside after a pullback. So far we have seen wave A to the downside, you had a wave B rise. Looks like that wave C could still be in the cards. There's a 50% retracement and the 61.8%. So these are the fib levels that are usually will pay a lot of attention, especially we have wave 4 of 2 lesser degrees in that area as well, and you have where wave C equals to wave A in that area. Also, I'm sure there are plenty of stops below that wave A. So as you know, for those who are looking to get short, they are probably going to do it with the sell stops, and some of the traders are already long and they have stops down here. And when this level is executed, what happens? Well, usually the opposite, as we know. So I'm looking for this to be as a very important, interesting level. And when this market, if this stock market would really play out what I'm looking at, I would be interested to look at Kiwi. Because if you look here, let me try to hide this. If you look here at the correlation, you can see it's a pretty strong one. Plus, we have Kiwi that is acting much stronger. So if we see this market, which is the weaker, and if we are going to see U.S. stock market recovering, I think that more upside, of course, will be seen on the Kiwi as well. Okay, we'll see more upside after the next pullback. But the question is, what is the pattern on the Kiwi? So let's take a look now. New Zealand dollar here is still is trapped in a very big triangle. Okay, but again, I don't want to predict any kind of a very big important lag in any market. Okay, I'm trying to be more realistic rather than calling for any major breakout. I'm not sure if the market will break to the upside since I have a bullish triangle or no, but the idea is that at least in the short, and not in the short term, but let's say in the next few months or in this year, we could see a retest of this upper trend line, and then let's see what happens. But for now, I think that there is room for more upside because this bounce from the lower side of this pattern is clearly impulsive, as I will show you in the next slide. So I think that the more upside could be seen after a pullback. But keep in mind that what I've been talking about with Dow Jones, right? So I think that if Dow Jones would really find a support down there, potentially Kiwi could also come back to this wave A area. Not sure it's going to happen, but that's clearly the levels that I will track on. Okay, so this is the important support levels around the former wave A, because you have a free wave drop here for a wave A, and notice that move to a new high was not really impulsive. Okay, was somehow slow, choppy, overlapping. Maybe wave B still can retest the highs, but that's not really impulsive or a motive wave structure. So in my opinion, it can be wave B that belongs to ongoing complex correction. So in other words, this retracement that started from here, okay, back in December, could actually be still underway. So in either scenario, we will see a retest of that levels and then bounce, sometimes from wave A level, sometimes even lower. So definitely the whole area down here around 0.60 is very, very important, up to 0.62, of course. Okay. Okay, now let's take a look also on gold. So gold is in a very nice recovery, but what is concerning, as I've been also talking last week, is that silver did not make the same breakout. Okay, so if you don't see silver actually maybe outperforming the gold in uptrend, then that's a worry. That's the warning sign, because normally the gold silver ratio, where I have it, here is gold. That's, I will make a new one. Am I blind? Anyway, let me take a look. Okay, I wanted to look at some other quotes because obviously that spike, that was some error here. But we can see that gold silver ratio is moving to the upside. But normally that's when this is happening, it means that silver is lagging. So that's not the real uptrend if you're not seeing silver and gold breaking to the upside, or maybe even silver outperforming the gold. So I think that here gold could potentially be trading at the resistance. I have this wave count, which is not really perfect. Okay, it's not really perfect. It has some tricky structure, but still, in my opinion, it's important that we are rallying here with 5 waves out of this triangle, so could potentially be limiting the upside here, even if just short term. Also, keep an eye on this trend line. If this trend line would be broken, I think that we could step into the corrective phase. However, the important is the corrective phase. So I think it will be only temporary retracement before this market moves even higher. So the important is still the higher degree picture. Clearly, 3 waves drop, so more upside, but as I said, after a pullback. Because I'm seeing gold silver ratio moving to the upside. Silver is not following gold to the same degree, so that's something that we should consider. On looking at silver here, you can clearly see that it's coming quite aggressively to the downside, possibly stepping into the wave 4. So I want to see the reaction here around $22 or 22.50. That's the ideal support for this wave 4. Okay, so if you want to be looking at the metals potential longs, probably that's the area that I, or at least personally, will focus on. The invalidation level, I will not say it here at 21.20, but I will rather say it here around $20, because, or again, it's a round figure. Okay, and also I would give it a little more space for market to breathe before eventually could break to the upside. But looking at the big picture here, we are consolidating clearly here at these important trend lines. So this consolidation obviously could take some time, but longer it will unfold, more stronger can be the breakout whenever this one occurs. But I still think that in 2022 we have been bottoming. Also, looking at the very big chart here, I think that this was pandemic low, very strong move to the upside. As you know, back in 2000, at the end of 2020, 2021, even 2022, there were plenty of uh, calls on the bullish side for metals that we are going, I don't know where. But if something is overcrowded, well, simply is not happening. So that's how, unfortunately, the market works from psychological perspective. But since we have seen this very nice and strong and quite strong dip, I must admit, it's still looking very promising after very nice rebound last year. So I think that there can be more upside in the cards. But again, I will not be too aggressive on the bullish side. But $30 or maybe even 35 could be the upward objective, as long as we are trading above these 2022 lows. Okay, traders, I hope that you enjoyed this webinar. I hope that you will try to join me again next time. If you have any questions, anything, please leave me a comment. If you're watching this on YouTube, on TradingView, you can still leave me a comment in this chat box. Also, there are links below the video, so if you're interested in anything what we do, check those links below. Okay, traders, have a good trading week, and again, I hope to see you next Monday. As always, make sure to put your notification on, to subscribe to our YouTube channel